Welcome back. Hope you're having a good morning. For starters, though, the Gift Nifty suggesting some bit of a pullback. A 30-point pullback is what we could see yesterday. Remember, we went all the way down to around 21,900, and from there we saw a bit of a bounce at close. Let's see how things go. But let's discuss some stocks. We have Dipan Mehta, Director Elixir Equities, who joins us on the show. Hi, Dipan. Good morning. Hope you're feeling good. And I'm wondering whether or not you have your shopping list ready, because the markets have been looking a little bit jittery. May not be the headline index, but from the broader markets. If yes, from the broader markets, any couple of stocks that you could share with us that you're looking to buy?
Yeah, good morning, Nigel, and thank you for having me on your show. This is not even a correction, Nigel. It's just a minor blip, I think, considering the kind of move up we have seen. So there's no shopping list as of now. It can start only when there's a deeper correction. I was just seeing that template which you put out. The Nifty is hardly down by what, 1.5% from its peak. A correction is when it's dropped 10% minimum from its peak, and we're a long way from there. So let's not get into a buying mode at this point of time and see how this actually kind of plays out over the next few weeks or so. I think next 1 or 2 weeks are very important. And if this correction deepens, then you will have maybe some more selling pressure and more momentum-based selling taking place. And if you notice the list of stocks which have lost a lot of value, maybe 25, 30, 35, 40%, those are the ones where the fundamentals are extremely poor, or they have got hardly any profits and valuations were really out of whack. The really good quality mid-cap stocks have not really corrected as much. And from an investment perspective, we just want to wait and watch and see how this particular correction plays out.
Okay, all right. No shopping list as of now. Dipan, I wasn't referring to the Nifty. Actually, I was referring to the broader markets, because out there the index is corrected more than 10%, the mid-cap and the small-cap indices, and stocks are down by 20, 30%. But as you said, maybe some stocks ran ahead of fundamentals. So for the time being, you want to wait and watch. In our top 10 segment, we had covered a couple of stocks, Federal Bank and South Indian Bank. The RBI has wrapped them on the knuckles yet again. They have issued a directive to stop issuing co-branded credit cards. What's your view on this and the recent regulatory action that we've seen?
See, Nigel, both these companies are trading at very attractive valuations, no doubt about that. I would say about 1.2 times book or so. But their growth rates also are slower than some of the larger private sector banks. With Federal Bank especially, there's a little uncertainty around the next CEO, considering that there's no extension given to the present one who had really turned around the company per se. And as such, given that our view is slightly cautious, we just want to wait and watch on all these companies where there is some kind of regulatory action or some uncertainty around how they will scale their business forward. So I would say that if you're an investor, I think just remain invested. But from a fresh investment perspective, it's better to keep the powder dry and look for good quality franchises which may be available at even lower valuations over the next 1 or 2 weeks if this correction deepens.
Dipan, hi, good morning. So, the important point to remember here is after such a big rally, there is 2 days of a fall that we've seen, right? So having said that, this is barely a correction, as you said. But for a long-term investor who is maybe looking to create a shopping basket, in the mid and the small cap space, if you had to identify a couple of names for us where you feel that the fundamentals are still strong, valuations are not that expensive, and maybe it's a good idea to be buying, maybe not now, a week from now, which ones would they be?
Yeah, good question, Sonia. You're trying to get names out of me, but I'm there every week on your show. So next week, we can talk about names I can think of, because all depends upon what the correction takes place. And, generally, I think the investment themes don't change because of a correction of even 10, 12%, 15%. And the investment themes we know are all around India consumption and around capital goods. So if we have some correction on those good quality stocks over there, the likes of Trent, Titan, and maybe Indian hotels, Interglobe Aviation, healthcare, travel, tourism, retail. I think if the leaders over there correct by 15, 20, 25% or so and are in a good zone, then I think that's the starting point for a shopping basket. Same holds true for capital goods companies, the likes of Larsen & Toubro, ITD Cementation, which are all sitting on huge order book position. Indian defense, PSU defense companies also, where there's good earning visibility. Real estate companies as well, which are sitting on very good projects, and NAVs keeping on increasing quarter after quarter. So as such, I think fundamentals are pretty decent for a whole host of industries, as I also heard on your show earlier. It's just that the valuations were getting uncomfortable, and I can't give a reason or a trigger for valuations to correct, but they should correct in order for you to start looking at making fresh investments at least.
That's an interesting and important point, Dipan, morning that you made, right? And day before yesterday, I was saying the same thing, which is that falls have happened. Indexes, small cap indexes corrected 13%, but things that you want to buy are not down that much. I was giving this example day before. If you're a flexi cap fund manager, would you be, and you're sitting cash on your hands, would you be jumping with joy because things have fallen a lot? Probably not, right? Because things which have fallen, you would not have bought on the way up in any case, and they are now starting to come off. So it, in that sense, makes not very much difference. Of course, I mean, there are exceptions here and there, and it's all, of course, subjective, and beauty, as they say, lies in the eyes of the beholder. But point taken. Dipan, so far corrections have been short-lived and very brief, 4%, 5%, that's it. And the market turns right back. Do you think this time it could perhaps be a little different and maybe a little more prolonged? What's your sense?
See, I think a lot depends upon the technicals of the market and the capital flows. And, till now also, yesterday also, we saw very strong DII flows. If there was some threat over there, then I would say that this could be a deeper correction time-wise as well as price-wise. So I think more than watching the FII flows the next few trading sessions, I'll be watching the DII flows, because there is some tinkering happening over there as far as flows coming into small mid-cap funds. And certainly, let us really observe the sentiment of the retail investor, whether, that it's staying steadfast or whether there is some kind of a flagging over there. These are the important points to look out for. I think fundamentally we can't figure out any particular trigger which may take stock prices significantly lower. And stocks have moved up also on account of huge liquidity flows into the market. So I think the key barometer to watch over here is the liquidity coming in and going out from the market, and whether that is different from some of the other minor corrections of, say, 4 or 5 trading sessions, which we have seen over the past maybe 18 months or so.
All right. Dipan, yesterday, in fact, we had Nilesh Shah of Kotak who joined us, and the point he made was that in the next 12 months, the domestic mutual fund industry, they could have close to around 4 lakh crore at their disposal, going by the current run rate of SIPs, going by the maintained close to around 100,000 crores of, liquidity with them. And also there's some balance advance funds as well. So put all of that together. So domestic mutual funds, they will pick and choose what they want to get into. But Dipan, I wanted to ask you your view on Coal India. But first, let me just tell our viewers about a note that Jefferies put out on Coal India earlier today. They say that they have a buy rating, target price of around 520. They believe that this 13% decline that we're seeing in the stock, it's a good buying opportunity. And 2 big reasons they've given out there. Volume growth, they're expecting it to continue to feed India's rising power demand. And they're working with the 8% growth for this year and close to around 6% CAGR growth for the next couple of years. On Coal India's targets, they're saying for FY24, what they've set out to do around 770, they're pretty much on board. On their FY25 basis, what Coal India has said, well, they are a little bit lower than that 838 million tons. The second point that they're mentioning besides volumes is that there's a big fall in e-auction prices, but they believe it's largely behind. And if you pull up the trajectory, the e-auction premium to FSA prices, that's come down from around 200% to 117%. And for this quarter, it's in that vicinity of around 35 to 50%. Jefferies is working with a 50% premium, and they're saying this is more or less in line with the average that we've seen in the last 10 years or so, which is around 63%. But if it does fall, then that's a risk to the EPS estimates. And the third point they make is, first point is volume, second point is on e-auction prices, third point is on valuations. They're saying it's trading at around 8.3 times, which is at a bit of a discount in comparison to its historical averages, and a discount in comparison to the Nifty as well, Nifty multiples. And, so that's all the reasons that they've given why they're positive on it. Dipan, do you buy this argument? Coal India at around 417 rupees. It was a 480 rupees stock a short while back. But also if you go back to maybe 12 months or so ago, it was less than a 250 rupee stock. Your view?
Yeah, certainly. I think all PSU stocks, including Coal India, have done well. And there's no denying the fact that overall efficiencies at the company certainly have improved. But end of the day, it's a cyclical business. And, in times like this, if you expect the correction to deepen, and I still expect that sometime in 2024, maybe the 200-day moving average will get tested. So I'd like to be in cash as of now and then look for opportunities to buy into great businesses which you otherwise can't buy in a bull market where you can see scope for multi-bagger returns. I haven't identified those companies as yet. But intuitively, I feel that it's better to buy quality businesses when there's a correction and not stocks like Coal India.
Dipan, what do you make of NMDC? You know, in our past few interactions, I've asked you, what about Ferris? You've said, Nigel, better options to look at. And, you know, that was in the uptrend. Now in the downtrend, what are you thinking about NMDC? It has a dividend element. Problem is, I know pricing itself is collapsing.
Nigel, you're fairly familiar with my views on commodity stocks. And if this correction turns out to be even deeper and you see maybe 10% type of a correction on the Nifty over the next few weeks or months or so, then you will have very interesting stocks, good quality businesses, secular growth companies, could be in pharma, could be in mid-cap IT, could be in consumption, you know, which you cannot normally buy when the markets are raging. That's why you need to focus on, and not the likes of NMDC or Coal India or some of the other quality business or the other not so great businesses which don't have a great track record as well, and which have high cyclicality and volatility in earnings. So that's why thinking at this point of time, I'm just watching the market for a few sessions. Is it correcting? Is this going deeper? And then keeping a track of all the good quality consumption oriented or capex business or pharmaceutical businesses, mid-cap IT, you know, likes of persistent systems which I missed out, KPIT, you know, these are businesses which are evergreen and next 4 or 5 years looks fantastic for them, but they're still trading at 50 times plus. Are they coming at 35, 40 times or so, you know, over the next quarter or so? That's where my mind is thinking, and that's why I'm looking for opportunities. A lot of new listings also have taken place, and you know, they had fabulous listings and huge rallies. Are they correcting over there? That's the kind of you know, thoughts which are going through my mind just now.
Okay, all right, Dipan, thanks a lot for joining us. It has been a couple of tough days for the market, but hopefully, as they say, this too shall pass. We've seen this in so many cycles, right, of the market, that nothing rises in a linear fashion, and of course now there is some pullback that this market is seeing.